welcome back to another top-notch video. Guys, this week we're going to be talking about the new year, January 1st through the 5th of this month. As you guys know, it is a new year, so let's get right into it. Some of the biggest things I saw from this first week is the market continued to rally in this first week, just like it did in the last part of the year. We're coming off that Santa Claus rally, which it did end up doing very well for that Santa Claus. Really, the returns were great. Dow gained 221 points on Friday, and it's only the ninth time since 1960 that it's done that, with 4 consecutive gains last week. It was a very good week to be in the markets. We don't mess around with those. I can't track those very well because it's a number of the funds all together. Got the G fund, which we don't mess around with. So let's start with our C fund, or ETF IVV, and this is the S&P 500. I'm going to zoom up for you guys so you can look at it. So as you can see with our C fund, or IVV, we did break a resistance line here. We did break it back here, but just this week again we are way above that resistance line. I think we're going to see a new trend here, guys. So that's important. We were not allocated in the C fund, but it's fun to watch for sure. It's great that it broke this trend line, and as you can see, we're up for the week, so that is excellent. Let's look at it from a chart perspective. From our weekly chart perspective, our C fund is still continuing to lose energy here, so just be aware of that. I would just be very cautious with this fund. I would almost think that it would come back to that resistance line, and either it's so rare when they have a new breakout that I would just be cautious. I wouldn't exactly put my money in there yet, and as you can see, we are losing resistance here. Our DO went from 402 to 393. But it was overall a good week. If you look at it, the 2-day chart, just came out of a fake out. So we were going down and it just took off again. So like with the markets, guys, there's no way to make predictions, just probabilities. That's all these charts point to, is the probability of it going up or going down. And right now on the 2-day chart, the probability says it's probably going to continue to rise, but I would just be cautious with this weekly chart. Let's move on. We're going to move on to the S fund. So that's our ETF VXF. Okay, and this is the Dow Jones. And with the Dow Jones, we're sitting pretty. We're right in the middle of 2 resistance lines, and it continues to rise. We just pulled our funds out of this fund. It was positive for the week. Let's look at it on these charts. As you can see, one second, make sure I got the right chart for you guys. Okay, so for our weekly chart, as you guys can see, for a number of weeks we were sitting, we didn't really know. It was going up and down on our weekly chart. This isn't a good trend for us based off the charts, because it's very hard to see what the markets are doing. But as you can see, they were rallying, and we did have our funds in there for most of December. Now for January, it did have quite we went from the mid part of December from our DO basically from 2.14 to 211, and we ended up switching to the I fund, but then it did take off to 2.59. And we did see a rise here, so that's a good sign for this fund. But just be aware that because we've had all this congestion here, and we have this, it's starting to lose energy here, I would just be very cautious. This fund's probably going to end up hitting. I would say it would hit this probably resistance line. It's probably going to go back down. So I would just be careful with that. I wouldn't have my funds in this one right now. Just they're better funds to have the TSP funds in, or your brokerage funds in. So just be aware of that, guys, as we continue on. So let's move to our next fund, which is the I fund, or our ETF EFA. This is our international markets. EFA really took off, guys, since the beginning of 2018. It just skyrocketed. And this is what we've had our money in this past week. So this has just been great for us. It was a very good decision for us to move our funds into this account, and it has just blew through this resistance line. I'm hoping that it will continue, but just look this week for pullbacks back to this resistance line. Usually we'll probably come back to test this line, so just be aware of that. But let's look at it on our charts. So EFA, this is a very, very good indication, guys. Our blue line has decided to cross our red line here, so that is our PPO line versus our moving average line. We had a solid cross this last week, and we had our first positive energy week. This is a great place to have your funds, and obviously just a blowout on the market for those first 4 days. Just an excellent rise in funds. I will show you it on the 2-day charts just to show you. As you can see, we had that blowout since the beginning of the year. We crossed back here, so we made the decision to move our funds into this account for TSP or for the EFA or I fund, and it's just been a blowout. Now, the only thing I would caution with this is we are outside our Bollinger Bands, so I would probably look for a pullback this week, but I would not take my funds out of this account. So overall, I'm pretty happy about this funds, and we'll see where it goes for this next week. Lastly, let's look at bonds. Wasn't a big fan of bonds in 2017, and let's look at it for 2018. If you look at prior videos, I never said that the bonds fund was going to come really back with this transition line coming down to the 109.50 line, and it's continued just go downhill, guys. It's now it's at 904 as of last week, and I just don't see this thing getting anything above this. It's just not going to make it above this transition line. And let's look at chart support for that. As you can see from our weekly chart, we were coming out with AGG, but we just did not see a way forward with that, and I'm very glad we didn't allocate funds to that. We saw an increased minus energy here, and then back down basically here. We went from negative 0.50 to 0.47, but it's just not something I would invest my funds into. This is the 2-day chart, and as you can see, it's going back down into negative energy, and we're probably going to have a negative cross here again. So I just would not put money into bonds at this point. Bonds is still not a good option or basically your AGG ETF or your F fund for the TSP. Just not something I would allocate for at this time. So with all that said and done, in this new year, where are we going forward? I would definitely suggest we're seeing some great things out of our C and F fund, but I would continue with the I fund. Look for pullbacks this week to get to those transition lines, but nothing to be worried about, guys. So our allocation is going to stand for where it was for last week. We're going to leave everything in our I fund for now. The I fund did the best last year. We're going to continue with how that goes until we see something major that we need to basically pull that back from. If you guys like this video, go ahead and subscribe to the channel, or if you have questions, go ahead and leave a comment below. I really appreciate you guys listening in every week, and we'll see you guys next time.